This is David Patrick, Fitzstock Charts, market video update for April 24, 2019. We are in a 17-day uptrend. We had a 40-day uptrend this year and now a 17-day. That's 57 days of uptrends in just two uptrends. Normally, you only get 2 to 3 good uptrends in a year. We've already had 3 this year in 57 days. That's crazy bullish, and we got paid. We got paid because we didn't overthink, we didn't overtrade, we didn't use emotions, opinions. We traded robot style with trading rules of engagement based on market trend using historical chart pattern comparisons. So make sure you're making your money in uptrends, because I've said this over and over and over again. Things will get more difficult. I promise. I know you don't want to hear that, but I promise. There's going to be times that the market goes sideways. There's going to be times this market goes up, down, no trend. There's going to be times that we're in a sustained downtrend. You have to enjoy these moves up. You have to make your money when we're in uptrends. We had 3 of them. So you are high stacked. You've been paid fat in 2019 after a huge year last year. Now you just sit back. My advice is pull back the throttle a little bit. That doesn't mean get bearish. This doesn't mean go all cash. That means start to scale a little bit. You see me, I've been leveraged long many times this year, 130% long. Right now I'm 70%. That doesn't mean I'm bearish at all. It means I've pulled back the throttle. I'm going to take my day trades in my trading account with the ES or with Netflix yesterday. Because right now, we have outperformed the market huge this year. And what we don't want to do is be all in and then some, like leverage long I've been many times, and then all of a sudden we see a little tiny dip and we give some back. So we're never going to pick the market top. My advice is take something off the table. Pay yourself. That's what trading is all about, investing. You have to pay yourself. If you never pay yourself, you're going to watch the stock go all the way up and then all the way down, all the way up, all the way down. Pay yourself. Reward your trades. 17-day uptrend. Still hit it out of the park with this 1998 historical chart pattern comparison. We'll look at that in a moment. Currently this year, in 2019, 166 different stocks have engaged off of our trading focus list. 18 losers. 5 no scales. We haven't been able to scale yet, so we don't know if they're a winner or loser. 143 winners, 86% win rate, unheard of, and probably most likely unsustainable. More or less, we've been achieving closer to 75% win rate. But we've been having a huge year. So congrats to all with your trading success. Continue to trade like a robot without opinions or emotions. Use the system. Use the rules of engagement. They work. And remember, whenever we do go into a downtrend or a no trend, you need to scale even more and put your stops in. And you don't need to short stocks in downtrends. I need to emphasize that again. Okay, so FAANG stocks, we got paid huge. I mean, I think Apple's in the 90% club. We'll look at that in a moment. But they also have earnings coming up. I believe we have earnings either starting tomorrow or tonight or Friday, then a couple next week. So just remember, you do not risk your hard-earned money, your principal, into event risk. Only risk the house's money, especially if you're talking about options. I mean, if you're an investor and you took Apple and you've scaled 3/4 and you're holding on to 25% runner, by all means, you're fine. We're up huge in that stock. But options, just be careful with. Only risk your profits, a portion of them, going into event risk. Here's our 90% club. 89 doublers year to date, 29 triplers, $1,038 since we launched the service. Let's just do a quick scan here on Apple. So let's see. There's Apple right here on 3/14. Those options went up 96%. On 3/4, those options went up 340%. On 2/4, 260%. That's 3 times this year, 260% back in February. On January, up 201%. That's its fourth time. And again in January, 204%. 5 times. So 5 times this year, Apple is in the 90% club. So if you're an investor or a swing long trader, yes, by all means, you can hold your runner if it's an equity, a stock, into earnings. If you're going to take an option into earnings, make sure it's only profits only, because those can evaporate fast. Okay, so let's look at our 1998 historical chart pattern comparison that we hit it out of the park with. On the left, 1998, you can see Death Cross, Golden Cross. Over here, Death Cross, Golden Cross. And we're about, and I'm not calling, I've said this over again, I'm not calling for a pullback. I'm just saying if we don't diverge from this pattern, there could be a pullback next week. We are not going to predict that. If there is, should be good support at the 50 SMA, right? We've hit it out of the park with this historical chart pattern comparison like we have with many, but don't fall in love with it. It will eventually diverge. We could just keep ripping to new highs, or maybe we cave back in. So right now, we haven't diverged, and it's saying if the market pulls back, let me pull up the SPX because that's what we're really following here, we're tracking. 28.28 is the current 50 SMA, and that's rising. So I would have to say this candle's low right there, which is 28.48. Let's just call it 28.50. 28.50, and then there's this gap fill down here. But I don't think that gap gets filled, in my personal opinion. I think the market's too strong. I think if we're lucky enough to see a pullback, it holds this 50 SMA. Let's call it 28.50. What is that? 80 handles? That's nothing. It's 2 3/4% roughly. I mean, we're up. Just think about it. How much are we up? 2,500 to 2,900. That's huge. The market's got to be up 18% in the year. And I'm talking about if we pull back, which we haven't yet. There's no signs of it. If we might do a measly 2% pullback. So stay long. Don't pick the top. Stay long. If we're lucky enough to see a pullback to the 50 SMA, we're going to be adding. All right, that's the game plan. Let's look at the Nasdaq. This was our price projected trading zone that we were in for a while. We are now above it. So maybe it now becomes support and we go rip to new highs like the market's been doing almost every day. In fact, as we speak, the market's almost grew in the day and we were down 5-6 handles. So the market is extremely strong. Don't try to short it. And if we do go in a downtrend, you still don't have to short it. Okay, just remember that. All right, let's fly through everything here. What do we got? Oil futures continue to look very bullish on oil futures. How is the XLE cooperating? Is it cooperating? Well, that was the price projected zone. We're getting back into it, and you really need to get back above this highs back in here. And those highs are what, around 70, let's call it 70 and a half. Above 70 and a half, I think I'd be more bullish that sector. IYT, I love this. Head, left shoulder, right shoulder. You got inverse head and shoulders on the IYT. I do think the IYT is going to new highs. How and when it gets there, I'm not going to try to predict. But that looks very bullish. So oil looks good. Oil service stocks just look okay. Financials are still in this wedge. We've been talking about this. Can they get to the top before they see a pullback? Yes. They haven't really been cooperating the last couple days here. So just watch those. IWM underperforming. Hasn't really gone anywhere now in 2+ months. So that's why I like to trade the strongest ETFs. QQQ, UDOW, spiders. And that's what I'm in, right? IBB, bottom of the wedge, holding. We said we broke the wedge. Don't be surprised if this comes back in the wedge. So now it is back in the wedge, and we're going to see what happens from here. We're not going to predict it. Gold caving in and now has still more gaps to fill on the downside. Would not take that trade. In bonds, breaking this downtrend line, MACD starting to curl back up. The problem is you're going into a gap, and usually you stall. So I think for our next, we've already had this on the 90% club once this year. We're going to be patient and wait for a better setup with bonds. Apple looks phenomenal, continues to look phenomenal. price projection still up here to fill this gap at 220. It does have earnings coming up, so just be careful. Only risk the house's money into earnings. Amazon looks phenomenal. It is creating a lower high. I do think we get back up here to 2,000. It's going to be interesting to see how the market handles it when we get back up there. Netflix, great day yesterday, extremely weak today. And I would not be surprised if Netflix heads back down, because if we draw a wedge pattern, this really isn't another wedge, right? And not really this wedge. It's probably not a good diagram. I'll probably have to draw it from here. But either way, this is a wedge, and as we know, as it gets to the top, I scaled 85% of my trade yesterday because this one's just been a little bit more difficult to get going, and we still have some wood to chop up here to get up here. So just use stops in your runner. I raised my stop. I only have 15% left. I raised my stop to yesterday's low. Get stopped. It's still not a profitable trade. So you always want to put yourself in a position where you're only risking the house's money, and that's what I did there. Booking, yeah. Once again, what do we talk about? As you come into gaps, you stall. It's right now in that gap, and it's stalling. And this one really hasn't set up in a while. Expedia, neither of those look great. Google looks phenomenal. This one looks like it really wants new highs. Once again, we have earnings coming up. You have to wait till after earnings. So if these things gap up, you got to remember our number one trade is the gap up bull flag the following day and the day after. So just be patient. We've gotten paid so much on Facebook, Google, Apple, and even Netflix lately. There's no reason to add going into earnings, but they all look great. They're a little bit weak today, but they look great. Google, we just looked at Google. We look at Facebook. Yeah, I think we looked at all those. NVIDIA, pausing right below the 200 SMA. Intel, Texas Instruments. I don't see a whole lot of new. Texas Instruments looks really good. That's price strength confirmation. The problem is it's new highs without MACD, and you have this gap right here that's starting to fill. I'd rather see a thrusting candle higher than to chase it maybe up here. But we've been paid so much on some of these chip stocks. Avgo, OLED. By the way, Qualcomm is just taken off too. Light and Xilinx. Xilinx is one of our best performing stocks year to date. This we hit it out of the park with bull flag, price strength confirmation, and now you're getting too close to earnings to add. We said the whole way up 130 to 140, and now we're nearing 140. So if you're holding the stock long, congrats. A huge swing long that you got paid on fat. Microsoft looks good. New highs. MACD looks okay. Oracle, new highs. MACD looks okay. It is bullish. Adobe, Coop. Adobe looks good. Coop looks just okay now. CRM. A lot of these are losing a little bit of momentum. Doesn't mean they're bearish. It just means the momentum, the wind's coming out of the sails a little bit. Team, SQ. Did we look at Splunk? Twitter, I think, had a big day yesterday. It's a bull flag. That one could be setting up to add. Snap, all over the place. Let's look at China. Baba. It's not looking too great. Come on, type in Baidu, Dave. Let's see. I don't know why this is going through. Baidu. Just sleepy. NTES. Yeah, China doesn't look great. So the IBB doesn't look great. China doesn't look great. FAANG's slowing down a little bit. In fact, Netflix now is giving a lot back. That's down almost $5. So Netflix is giving a lot back right now. And so you have a little bit of red flags out there. We have that historical chart pattern comparison that maybe suggests a pullback by the end of next week. You have some weakness coming into FAANG today. You have the IBB that looks weak. Oil stocks are flat. Financial stocks really aren't cooperating. They're not really seeing any price strength confirmation. They're in a wedge. So this is just another reason to pull back the throttle. It's not a reason to be bearish. We've been paid. eBay looks really good, by the way. eBay and Twitter do look like new setups. But we've been paid so much this year. I just don't want you to risk too much going into earnings season. Box looks okay. Wix, GoDaddy, both look bullish. And let's flip to these banks and just see what we're talking about. JP Morgan, yeah, that's a bull flag. And that actually looks pretty decent. The financials have just acted really funny this year. And they have not been our leading sector. In fact, we have more stops in the banks than any sector. So it's just not a sector I want to lean into right now. But Visa and MasterCard do look really good. The exchange stocks, ICE, CME. CME looks the weakest out of the bunch. CBOE, they look okay, but they're just really not seeing a ton of momentum on the price strength confirmation part. COP, Phillips Petroleum, nothing. I'm going to fly through these. I just don't see. I think Oxy paid a little bit today, but I don't see great setups in that sector. I just would leave them alone. Win, Las Vegas Sands, they look even flat now. Tilray, CGC, yeah, those have really fallen asleep at the wheel. Let's go into Amgen. Still looks bearish, but there's really no price weakness confirmation. Gilead looks bad. It's just bouncing in the middle of nowhere. Alexion started to break down, then ripped back to touch the 10 SMA. ISRG, that looked like a breakdown, but no price weakness confirmation. So what I'm getting at is we're really seeing, even though we're in a 17 plus day uptrend, stocks in general are not seeing, at least today, the price strength confirmation that you want to see. And the weak stocks aren't even seeing price weakness confirmation. So to me, that's another reason to say, all right, let's continue to pay ourselves. As I'm flying through the rest of these stocks, I don't see a ton of setups. Continue to pay ourselves because that's really what trading is all about, right? DocuSign and then Lyft. Lyft did not engage yet, and we needed above here. I think we 5 minute rule, I believe, changed that. I got to double check. But MACD's heading in the right direction. Above here, I tell you what, if that thing gets above Tuesday's high, I might even get long that. But right now it's rejecting that. So you got to be careful and you got to wait. Let's finish up on this SPX. SPX looks phenomenal. We've gone straight up with no significant pullback, no test of the 50 SMA. Let me just tell you what would be normal. What would be normal is by the end of next week that we do see a pullback. The market's been very unnormal lately, so you almost have to expect the unexpected, which would be a continue to grind up almost every day because nobody expects that. And that's why you have to stay long, because in case that happens, you could miss the next 5-6% by trying to pick a top. We know what our game plan is. It's still on the road to 2950, the road to 3000. We know if for some reason we do see a pullback, we're looking for big time support, the 50 SMA. We're not calling for a pullback. We're saying if and when it happens. And it will happen eventually. It might not happen next week. It might not even happen next month. But the market will pull back, and when it does, there's going to be extreme support at the 50 SMA because the tape is bullish. We've looked at the higher time frame numerous times. The weekly tape is bullish. The weekly tape is saying we are going higher. There might be intraday pullbacks and there might be multi-day pullbacks, and we might even get knocked out of trend on the daily. But the weekly is still saying we are going higher. That's all I have for you in the market video update. Have a great day.